Hello and welcome to Pro Trader Strategies Market Commentary for Friday, May the 19th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Economic data, not so much across the pond, nothing here in the United States, but we do have Canadian data points in the form of CPI. I don't usually talk about Canada data points. It doesn't really hit too close to home and really isn't a global mover, but they did have CPI come out slightly lower than expected, and core retail sales slightly lower than expected as well. Anyway, on to the overall markets. We've got crude oil back above $50 a barrel today, really blasting higher, up over $1, putting that full golden cross, if you will, in jeopardy as we were looking for the 50-day to cross over the 200-day. It does not look like it's going to happen right now anyway, or it's at least holding it off with today's big rally away from the point of control, which is where the most time and volume's been spent. So crude oil moving higher. We'll talk about my USO trade. Was able to get that off, albeit yesterday. Probably could get it off a little bit better today if you still have that trade on, or if you have that trade on where you are long USO by being short those puts. Anyway, on to gold futures. Gold futures are in negative territory. This chart looks a little funny because it is a green bar when we're looking at negative, and if you look at yesterday's bar, it looks like it was a little bit lower. We are still at the point of control where the most time and volume has been spent, where this is going to feel very comfortable. But if we take off what has happened in the after hours session, you can see here that it is negative on the day, albeit the green candle from where it opened, it is still in negative territory from yesterday's settlement. So that chart always looks a little funny. On to the bonds. Yesterday, kind of flight to quality. We talked about it, despite the fact that the equities were higher on the day. They finished very close to unchanged, slightly in negative territory today, but still kind of looking like a bit of a topping pattern going on here with the candles, the way they're setting up, almost looking like it's getting confirmed. I'd like to see it get below yesterday's low for real confirmation, but as I am early with generally most trades, I decided to put on a trade with that. We'll talk about that here in a minute. The Dow Jones Industrial Average up over 150 points, up about 160, and pushing up against that 9-day moving average. We're kind of in a bearish trend when it gets below that, at least short term, and especially below the 50-day, but today getting above that 50-day, kind of putting that longer term away. And as a matter of fact, it's really starting to look like it found a little bit of a bottom after that big sell-off. So you got the bottom here with the confirmation to a little bit of a bottom here to keep that upward momentum, making the bears quite happy today. NASDAQ, same situation. This candlestick giving back or taking back almost half of yesterday's, really starting to look pretty bullish there as well, and then confirmation by trading up and above yesterday's high. So looking bullish there, and even more so with the E-mini S&Ps. Broke below this 50-day moving average, making it look very bearish, but yesterday kind of pushed up and tested kind of that 50-day again, was kind of coming up a bit short there, but today's move to the upside makes it look like it's a pretty solid bullish indicator there. We can look at it on the 30-minute chart of the E-mini S&Ps. This is with the day and overnight sessions. You can see basically overnight started to push higher, and then on the open Really not a whole lot of data to speak of, but the overall market just blasted to the upside right out of the gates. Now, on to a few trades that I've done. I talked about this briefly in when we were talking about crude oil. USO is the oil ETF for the U.S. Oil ETF fund. Pushing higher today. Yesterday I was able to get out of this trade. In USO I had on what did I have on in the USO? There we go. USO I had on the June 9.5 puts, and originally sold them for 24 cents, bought them back for 10 cents yesterday, kind of going along with my rules of 50% of max profit. I wanted to get a little bit more for that because I didn't collect a whole lot at the origination of that trade, only collecting 24 cents, so I wanted to squeeze out a little bit more for that. So that's why I was working the 10. Plus we were moving higher. Today you could probably get that off a little bit better. Then on to a couple of the earnings trades that I tweeted out yesterday late in the day. So if you're following me on Twitter at Wolfman's blog, you would have seen these trades come across pretty close to the end of the day. I think I did them about an hour before the close with Applied Materials, which is ticker symbol AMAT. Ended up going in there and doing the May, which are expiring today, and did a strangle in there. Did 41.5, 46 strangle. Originally collected 56 cents for that. Bought it back this morning for 7 cents for a nice little profit there. They came right, or actually I bought it back for 4 cents, and the came out with right in line with expectations for their earnings, slightly higher by about 3 cents on the earnings per share. Then with Deere, I went into Deere because I thought, I looked back, checked out what Caterpillar did. Now a lot of people will say Caterpillar and Deere aren't necessarily the exact same type of company, kind of like people will say Coke and Pepsi aren't the exact same kind of company, Coke being more soft drinks and Pepsi being about 80% of the snack food aisle. Deere the same way. It's more into farming, Caterpillar more into mining, but Caterpillar doesn't really do a whole lot of farming, and Deere doesn't do a whole lot of mining, but they still have a very close relationship with what type of products they're producing. So with Caterpillar beating the street by almost double, I figured Deere was probably going to do pretty good in there as well. So with the Deere, I only went in and sold some naked puts in there and did the May and sold the 108 puts. Originally collected 62 cents in there and bought those back this morning for a penny because they're so far away, especially when it blasted off. Probably not going to get better than a penny anyway, but was able to get out for a penny in Deere. The only way you're probably going to get out better than that is just to let it expire worthless, but I always cover those trades. I don't want to ride those out. All right, now with WYNN actually it was a little bit worse this morning for me anyway when looking at the chart. So if I took a trend line here, you can see that WYNN has been trending. My pointer wants to come up, basically coming through this area. So I was looking for it to kind of break out of this range. Did break out of that range, and I was looking for it to really have a nice pullback after those 52-week highs. It did break below that, but this morning when it kind of bounced back into that trend area, it looked like it was more of a confirmation of a rally, so I decided to cover this trade. It was basically long a put spread in there in the September, and I was long the 125 puts and then short the 120 puts. Came down very close to my target there, as you can see. It came right to it. Wasn't quick enough to pull the trigger yesterday because it was right on the open. Thought we might get more of a pullback, and then the entire day started rallying. Today covered that for a scratch. Originally paid $2.33 for it. Covered it for $2.35. So scratch for all intended purposes as far as I'm concerned with that one. Then a couple of trades that I put on for today. talked about this. Looks like we have a confirmation of a push to the upside. So with SPY, I ended up going in there. The implied volatility is coming out of it a little bit now, but wanted to get in there before implied volatility came out too much. It's ended up going into the July, or actually it went into the June, sold the 230 puts and collected an 88-cent credit for that. Just looking for implied volatility to come out and a directional move to the upside, so it sold some puts in there. Then inversely related to that, I went into the TLT, and TLT being the push to the upside. If we start seeing the equities rally, I think that TLT is going to come back down to the point of control where we've been talking about it kind of getting comfortable pricing in all of the rate hikes that the Fed has projected going forward. So in there, I went to the July and did the bought the 125 puts and then sold the 121 puts in there and paid a debit of $2.06, slightly over my rules for 50% of the width of those spreads. It's a 4-tick wide spread. I usually try and get around $2 or maybe less, but I think that this is a little bit more of an aggressive play, willing to give up those extra 6 cents to get into this trade for a pullback in TLT. So bent that rule just a little bit on paying slightly over it, but albeit only by 6 cents. I figured that would be okay. And with the low implied volatility percent on this ETF, it seemed to be the right strategy to put in there. If you follow some of my other webinars where I've actually compiled all of these strategies and shows where and when you can put on these strategies when it's the most beneficial anyway. All right, and today's webinar is going to be on synthetic shorts. Thought we were going to get more of a correction to the downside. It would have been a great opportunity to do this, but at the end of the day, there's always an opportunity to short different underlyings when they get overpriced, Goldman Sachs being a really good example of that. But we're going to go into a bunch of different ones, looking for strategies, or looking for this synthetic short strategy to place around an underlying that is still in a bearish trend. All right, so go to protraderstrategies.com, sign up for that. If you can't take that, take it easy.